Hey guys, welcome back to the channel McNallie Money, your home of all things stock, investment, and personal finance related. In today's video, we're pleased to welcome Charles Allen to the program. He's the chairman and CEO of BTCS, which is an Ethereum blockchain focused company. We've got a lot to talk about. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you've heard of BTCS before, if you're currently holding shares, and your outlook for 2025. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got Charles Allen. He's the chairman and CEO of BTCS, a very interesting and differentiated business model that we're excited to learn more about today. Charles, thanks so much for making the time and coming on the program.
Yep, thanks so much for having me.
Hey, of course. Now, BTCS is one we've talked about on the channel previously, obviously involved in the blockchain ecosystem space, but unlike a lot of the Bitcoin miners, more of an Ethereum flair. So, Charles, before we get into some of the specific questions, can you give us a little bit of background on yourself, how you got involved in the cryptocurrency world, and then ultimately what led you to BTCS?
Yeah, so I started my career as a mechanical engineer in the compound semiconducting industry. Then lived through the internet bubble burst. Went back, got my MBA, and I did investment banking for about 10 years, helping small and mid cap companies, go public. Was involved in a lot of SPACs. And in 2013, I got introduced to a company called Bitcoin Shops. It was an e-commerce site where you could buy stuff with Bitcoin. I was looking to kind of leverage my tech background and finance background, and I just got lucky. It fell in my lap. I helped take the company public in about 6 weeks via an RTO transaction, and we became the first public company in the Bitcoin sector back in, I think it was February 2014, which was really probably a bit too early, especially for the public markets. But it was pretty cool. To get involved and kind of learn about the power of the transformative power of crypto. So that's kind of how we got into it, and we've been in, we're still around, and now I think we got a really exciting business model that we can dive into a little bit, but that's kind of the background.
That's great. And yeah, we'll get into that business model. Interestingly enough, before we started recording, Charles, your long history in the industry has led you to mingle with many of the CEOs and members of the Power Mining Analysis channel too. So the Bitcoin mining group knows you and your company well. Now, speaking of BTCS, obviously a long evolution at this company. You now have a number of different facets within the business. So you've got the blockchain infrastructure, you've got node ops, ChainQ, and Builder Plus, among many others. For people who are maybe newer to the story or need a refresher, can you explain how all this fits together?
Yeah, I mean, it really all falls under an umbrella of blockchain infrastructure, and that's really what our company's been doing, for the last 10 years, right? So when we started, we were mining Bitcoin. We were the first public company to mine Bitcoin back in 2014. We basically shifted from Bitcoin to Ethereum around the beginning of 2021, primarily because the Bitcoin mining market was overcrowded. Ethereum, frankly, if you look over the performance of Ethereum over the last 5 years, it's more than double that of Bitcoin. And I'm not trying to knock Bitcoin. I love Bitcoin. I own Bitcoin. Ethereum's had better performance, not so much 2024, but over the last 5 years, it's done better. And it's got more utility, right? So Bitcoin's kind of a store of value, an asset. Ethereum has that, and you can build applications on top of it, which I think is pretty cool. And really, no one else is focusing on it. And so what we do is we secure Ethereum's blockchain, just like that's our blockchain infrastructure, just like a Bitcoin miner would secure, Bitcoin's infrastructure. The difference is it's proof of stake. So we have to stake our crypto to validator nodes. We run those validator nodes ourselves. And where we've kind of expanded beyond just running the validator nodes is the whole value chain of how transactions get onto the on-chain. And that's where Builder Plus comes in. So we're actually block building, helping assemble the blocks of a block that's comprised of transactions that land on chain and earning money doing that, generating revenue doing that.
That's great. And I'll throw up some slides or visual representations as well. So feel free, you guys, to pause at any point, take a look at these visuals as well. Now, we're going to get into some of the details in a second here, Charles, but we just finished up with 2024. This has been a question we're asking many of the Bitcoin miners as well. We've seen a lot of political changes towards cryptocurrency in the US, in the world. We've seen a big appetite from corporations to get involved in this sector. What were some of the highlights for BTCS in 2024 that really stick with you?
Yeah, so 2024 has really been an amazing year. We've laid the foundation for what will hopefully be, a great 2025. Kind of on the, operational side, we've built a lot. We brought all of our builders in house, or excuse me, all of our validators in house. We launched the Builder Plus block building initiative, which is now driving a super majority of our revenue. We had some new hires. Just on the number side, I think Q2 we were up approximately 30% in revenue over Q1. Q3 we were up another 30% over Q2. Q4 we haven't officially put those numbers out, but we achieved our 2024 goal that management incentives are tied to, and we have, just as an FYI, like all of our senior executives, all of our bonuses are tied to performance metrics. There's no discretionary comp. And so we crossed about 3.7 million in revenue for 2024, which, if you look at our Q3, I think we were about 780 in revenue. So it was a really good, Q4 was an exceptional quarter. We're up over 177% from 2023 in revenue. So we're seeing, really huge revenue growth. And I think the big catalyst there, and this is one that I think even the Bitcoin miners are dealing with, is we finally got through the SEC. So if you look at, latter half of 2023 and most of 2024, we were a pretty silent company. The press releases were just, here's our 10Q, not too many updates. Whereas, in 2024 as well. And a function of that was, we had a comment letter from the SEC, so you don't want to be throwing new stuff into the mix when they're asking you questions on old stuff. It took us, basically a year to clear the comments. They, unfortunately, the Division of Corporate Finance were not, in my opinion, doing their job, right? Their job is protection of investors and formation of capital, and that we were getting endless questions on things that we had answered historically. And then finally, I sent an email to them basically saying, you're not doing your job. You're harming, our 30,000 retail shareholders and harming the company. And then the next day they finally said they would let us through on our comment letter, which allows us to access capital and allows us to really grow the business. I mean, if you can't access the capital markets, why are you public? And so that was a long process. We were thrilled to get through. So that was a pretty big win. Another win, kind of on the SEC side, is when we entered the builder market, no one's ever done this before. So it's not like you're a private company, you just go do it. We spent 10 months with the SEC's Office of Chief Accountants to determine what is revenue, right? We had a position, they disagreed with it. We appealed, and we actually won the appeal. It went all the way to the chief accountant, Paul Munter at the SEC, where he looked at it, and we actually won that appeal. And so that really allowed us to step on the gas Q4 instead of earlier, because we were, debating how hard we should push into this business, depending on, how, if we're going to have a business where shareholders aren't getting a clear picture of what's actually happening. So those were pretty big wins on the regulatory front. So we had, great financial performance, heads down, building the company, a couple key hires, and then, we cleared some regulatory hurdles. So, 2024 was really amazing and set the stage for 2025.
Yeah, that's great. And as you say, so many companies unfairly had to kind of fly under the radar for the previous years. Now, with this new political sentiment and stance in the United States, hopefully that frees up a lot of opportunity in 2025, as you say, Charles. Now, I wanted to dig into the details here a little bit. You talked about the validator nodes, or the Ethereum validator nodes. Can you talk to us a little bit about how that works, what those do, and the proof of stake versus proof of work model?
Yeah, so basically, if you think about the way Bitcoin miners work, is you run a mining machine, you're going to have to crack the cryptographic algorithm to win the block, right? And if you win a block, you're going to get transaction fees and the block reward, right? Which is always every 4 years have. And most people don't self-mine because the variance, like how often you'll actually hit a block blocks are what, 10 minutes? It's going to take a long time. So everyone pools their resources into pools and then you get that reward. So with staking, what happens is to run a validator node, for Ethereum, you have to put in 32 ETH. And so if you put up 32 ETH, then you can run a validator node. Now, validator nodes get rewarded in two ways. You can get consensus rewards, which happen very frequently, and it's about 75% of your reward. And then about 25% of the time, you're going to get something called an execution layer reward, and that's for proposing a block. So think about it this way. If a validator, they're going to provide consensus to the network of what's true and correct, the state of the network, right, or state of the blockchain. On Ethereum, it's every 12 seconds, a new block is proposed, right? And so when a block is proposed, that's done by one validator. So a validator is randomly selected to propose a block. When we run validators, we're getting consensus rewards. And then when our turn is up, we get to propose a block to the network of transactions. And so think of that what's in that block of transactions could be, Bryce, could be me sending you some Ethereum. It could be a layer 2 transaction of, Polygon where there's something there. It could be something on Uniswap. There's all these types of transactions that can happen on Ethereum's network. And so those transactions can go to the public mempool where everyone can see. And so if you're a validator, that's kind of the one end of the spectrum. So you have validators, then relays, builders, and searchers. Right. And that's kind of the whole value chain of what's the MEV market. So as a validator, you can either just go to the mempool, pick your transactions and write those, or what most validators do is they sell their block space in an auction. So every 12 seconds, there's a new block. And you can say, hey, I want the most valuable block I can get. Instead of doing it in chronological order, going down this public queue, the mempool of first first FIFO, first in, first out,
Yep.
where the first transaction, the guy may not be able to may not be willing to pay that much to have that transaction land on chain, right? It may be, a less urgent transaction, so they'll set a low gas fee that they're willing to pay. Someone that's doing some arbitrage opportunity may be willing to pay a lot more to have that happen soon. And so this is where Ethereum's blockchain gets very dynamic very quickly. And so validators, what they'll do is they sell their block space in an auction to builders, and that goes through a relay. Think of that as like an escrow agent, just making sure everyone stays honest. Builders will basically be able to go search the mempool, get private order flow, and they'll reorder those transactions or bundles of transactions that could come in from a searcher, right, to get the highest value ones and then propose that as the transaction. And so what a block builder will do is buy in a public auction the right to that block space. They go get the transactions that go into that block, and the validator is basically obligated to propose the transaction as built by the builder, which means the builder gets, and this is what spent 10 months with the SEC on, the builder's revenue is all the gas fees incorporated in the block that they're having the validator propose, and their cost of sales is what they pay the validator to buy that block in the auction. That took 10 months to get consensus on the SEC. They were saying, no, it should be net. What you pay and what you buy it for less what you sell, your net, difference is your revenue. And we were like, well, that doesn't make sense, right? Because initially it was negative as we moved into this business, right? And we look at it on a blended basis of your validator revenue and your builder revenue. But so it's a very dynamic market compared to like how Bitcoin mining works. And so we basically expanded down into the builder chain, and we're looking at that whole value proposition because it's a huge market. And so I don't know if that kind of explains what we're doing on the builder side. And right now, no other public company is doing this. So we're the only public company focused on, and I really look at that as like, the complete Ethereum infrastructure side, right? Just like a Bitcoin miner. If you had a Bitcoin miner and it said, okay, well, they self-mine or they run a pool, running a Bitcoin mining pool is kind of similar to what we're doing on the block building to some extent, right? It's not directly, it's not a one for one or apples to apples, but it's kind of close. So it's like expanding down that chain.
No, it definitely makes sense, and it adds a lot of clarity, even in my mind, how these blocks are created, filled, auctioned, and the whole system is managed. But like you say, very dynamic, and every 12 seconds, you can only imagine how much information is moving around in unison in tandem here. So that makes a lot of sense. The next layer of that now is the staker protection plan. So the SPP, this is another feature of BTCS. How does this fit into that equation?
So basically, what the staker protection plan is it's a product geared towards validator and validator operators. And so right now, what happens is if you're a builder and you want to buy and you want block space, you have to buy it in the auction. And so with the staker protection plan, what we're doing is we're going to offer we've basically built out this product where instead of buying it in a public auction where we're bidding against other builders, we will pre-purchase it from validators. So if you're a validator and you want to pre-sell your block space to us, and as a validator, you'll know. So like ballpark, like 6 minutes in advance, you'll know if your validator is selected to propose a block. And so what you could do, instead of saying, let me auction this off in the market, you could pre-sell it to us, right? And so we would basically buy that block at like an average, like a trailing
Yep.
trailing price, right? And what that does is it gives the validator smooth earnings, right? They don't have to worry about fluctuations in the market, and it gives us access to block space, which is really important. So it'll give us access to more block space for our builder. We share, a super majority of the profits on the, above break even with the validators. So it's not like they're losing out on the upside. So it's kind of a win-win for validators to use, our builder because we're offering them better economics, and for that we get block space, which is something we need, and we share the profit. So it's a pretty interesting product, and we're hoping to bring on some customers with that to utilize that product in the near future.
Yeah, very cool and cutting edge. Now, I want to talk about the Ethereum HODL strategy. You just mentioned the requirement to run these validator nodes. You have to have Ethereum on balance sheet. Obviously, that's one component. You've talked about the Ethereum price as well, really appreciating quite nicely compared to Bitcoin over the last few years. Can you talk to us a little bit about your HODL strategy, your balance sheet strategy as it relates to Ethereum?
Yeah, I mean, here's the great part is we kind of get like the best of both worlds, right? So if you look at like, hey, on the Bitcoin side, should I invest in an ETF, which is just going to hold Bitcoin and do nothing? You might as well just buy Bitcoin at that point, right? Unless it's through like a Roth IRA, it's hard. Or you've got like the micro strategy, angle where they're levering up, they're taking out debt to buy Bitcoin, which works, you've got leveraged Bitcoin, or you've got like the Bitcoin miners, which frankly, like for the miners, and I know a lot are starting to buy Bitcoin now to accumulate the amount of Bitcoin you would need from mining versus just buying. You may be better off just buying, right? And so on the Ethereum side, the best part of it is because it's a proof of stake network, we're putting our money to work. So our Ethereum that we're buying is getting, it's basically getting staked to the nodes we run. So like our balance sheet is, I think, 82% Ethereum. And so that, when we put it there, we've already got exposure to Ethereum. but we're also, revenue generating on Ethereum, and we've got the builder, so we're fully downstream of that market. And so that's really unique, right? It gives us kind of a leverage, almost like a MicroStrategy has for Bitcoin on the Ethereum side, in that we've got leveraged revenue growth coming from our operations versus just a buy and hold. And even the ETFs right now, if you said, hey, let me go buy an Ethereum ETF, I think there's like 8 or 9 of them. None of them have staked Ethereum, right? And I think that'll probably change. That's more of a regulatory issue with the SEC. But right now, all they can do is buy and hold Ethereum just like a Bitcoin ETF would. The ability to, our Ethereum is staked. We run our own nodes. I imagine there will be ETFs that allow for staking, but I'm guessing that those ETFs, when they do come in, will stake it through a third-party custodian, because it's probably, I think that's required under the 40 Act, if I recall. How it's been a while since I looked at how 40 Act companies work, but that actually could be a huge win for us, because if they need to stake to, third-party providers, and we're not a third-party validator provider, but they may, for compliance reasons, want to use a compliant builder or a compliant relay. It's something we're looking at. And so we may have a very unique value proposition if that does, come to fruition. So it's something we're keeping an eye on.
Yeah, very interesting as the structure of this industry evolves. Now, you mentioned a few of these points earlier in the discussion. We talked about the halving as it impacts Bitcoin. We talked about network difficulty, the number of competition or competitive companies in that space. Can you talk to us a little bit about the benefits of the Ethereum model versus Bitcoin, and maybe some of those proxies you just mentioned, like an ETF or MicroStrategy?
Well, I mean, right now you have to kind of decide, like, if you want exposure to just Bitcoin, there's tons of options: ETFs, miners, exchanges, MicroStrategy, bit levered. If you want exposure to Ethereum, if you want it in the public markets, like, you have a couple ETFs, but there's nothing, there's no leverage, there's no growth, there's no revenue. I mean, it's similar to kind of buying a Bitcoin ETF. And so I think we're uniquely positioned there as really right now the only kind of, primarily Ethereum focused play, in the public markets on, the NASDAQ, right? Or I don't think there's any on the New York Stock Exchange either. And really even, there are a couple options in Canada. But so that, I think that's pretty unique. And so there's also huge upside in Ethereum, at least in my opinion, right? Like, Ethereum has performed very well over the last 5 years. It's got a different utility than Bitcoin, in that, you can build on top of it. It's more like a decentralized global computer system where you can use it to build smart contracts on top of. Obviously, there's competing blockchains like Solana, but it's still the dominant player. And so, if you're looking for exposure to crypto, like, the number two blockchain's actually very different than the number one, right? Like, Ethereum does very different things than Bitcoin does, right? It's got a very different use case. And so I don't think the market's fully grasped like how powerful it can be. Being the only kind of public company focused on it, I think it puts us in a unique spot. And hopefully we're not too early, right? We were the first Bitcoin miner in 2014. People thought we were crazy. The amount of times I heard Bitcoin's going away and it's dead. It's clearly not going away. I don't think Ethereum's going away. There will obviously be, competing blockchains, which is probably a good thing, right? To have a multi-chain world, if that's the way we're moving. So, our business model is different. I think, Ethereum's definitely a different model than Bitcoin. So.
No, it's a great observation. And we cater obviously to a lot of retail investors on this channel. And as a retail investor, you want to be early, but like you say, Charles, you don't want to be too early before anyone else actually catches on. So it seems BTCS and Ethereum have found that sweet spot. We've covered a lot in today's discussion. It's definitely helped me understand the business in greater detail. I wanted to kick it back to you for any closing thoughts. I know a press release came out today as well. Any upcoming catalysts maybe people should keep an eye on?
Yeah, I mean, I don't want to specifically say some of the things we're thinking about or that are upcoming, right? I don't want to put forward, looking statements here, but we were super quiet 2024 and 2023, and that's not the case anymore. We think there'll be more sensible regulation with the new administration. We've been heads down building, and now we have there's just a lot to show. And so I would just say stay tuned, keep an eye out for what we're doing. I think one of the biggest things we put out there, not many people may have picked up on this, is we put an 8K out at the beginning of the year, which basically we're not putting out formal guidance, but we did put out what management's revenue targets are. And so, we have a low end threshold of 4 million for the year, which is, there's a very, very extremely small payout at that level. The target's 8 million in revenue, and the stretch goal where we don't kind of earn any bonuses beyond that is 20 million, right? And payouts kind of scale with that. And so what I can say is like my goal, is to hit my, I'd really like the company to be able to hit those, that 20 million revenue mark, because that's our target, right? And that's obviously not a forecast, but that's my, goal that the compensation committee has set for myself and the other executives. And so that's what we're working towards.
That's great. Yeah, 2025 shaping up to be a big year for crypto, Bitcoin, Ethereum, and any of these companies involved in that sector. So, Charles, really appreciate your time today. Sounds like a lot going on at BTCS. We'll be waiting with ears and eyes open to hear as those updates come out. You guys, let us know in the comment section below if you have any questions for the team at BTCS. If you're currently holding shares, how you're feeling about this company entering 2025. With that being said, thanks so much for watching. We'll see you back here tomorrow.